Hi and welcome everyone. In about less than 15 minutes, as you all know, we will see the release of the UK labor market data. Now, first and foremost, we will see the UK unemployment rate. And as a reminder, this is a very important indicator because it is actually one of the key indicators of overall economic health because consumer spending is highly correlated with labor market conditions. In addition to the UK unemployment rate, we will also see the climate count change, and this is the change in number of people claiming employment-related benefits during the previous month. Why these indicators of the UK labor market are important? Well, because the Bank of England announced it will not raise rates before unemployment drops to 7%. Now, given that association, given that link, the more the unemployment data improves, the closer we get to a tighter monetary policy framework in the UK. Now, right here you can see several figures. First and foremost, the consensus of the anticipated forecast is 7.6%, while the previous data is 7.7%, and this is actually was unchanged if we compare the data in July and August. In addition to that, what we can also indicate is that in September we have seen this major improvement in the UK's job market when the number of unemployed plunged 41.6K, the biggest fall in more than 16 years, following a 32.6K decline in the previous month. And this decline was far better than a drop anticipated by analysts, which was 24.3K. A little bit, just if we talk about the anticipated forecast, let me just pull up a couple of charts so that you can have a look at what the Bloomberg analysts surveyed by Bloomberg actually are saying. Now, right here we can see that overall, these are just some of the experts that were polled by Bloomberg. The median estimate, as mentioned, is 7.6%, high estimate 7.8%. Overall, 30 economists were surveyed by Bloomberg. In addition, James Picerno, he is actually editor and analyst at Capital Spectator. He believes that if today's labor market report reflects weakness, yesterday inflation news may look somewhat darker after all. But economists are saying that this is actually low risk probability. In addition, some of the other experts, for example, an economist at Capital Economics in London, Samuel Toms, believes that it looks like we will see another fall in employment. This may bolster markets' view that interest will rise in a couple of years' time. Now, since the last projections in August, when the Bank of England said unemployment is unlikely to hit the 7% jobless threshold for considering interest rates increases until late 2016. The recovery has strengthened, as already stated in the beginning, and the economy added more jobs than expected. That's driven market yields higher. As investors bet official, we start tightening policy as early as 2015. So these are just some of the fundamental aspects that are important for you to remember. And now I will just give the word to my colleague Thomas, who will cover some of the fundamental aspects and comment on the data release in about 10 minutes.
Having a good day. All right, so in 10 minutes we'll be having a release, and right over here I'm sharing my trading platform, which at Great Britain, pound, United States dollar, 1 minute chart. All right, so give me a second because I can't really find my technical indicator slide, but it should be here in a second. Okay, so first of all, why I chose Great Pound United States dollar is basically due to the main attitude in the market. And oh yeah, and by the way, I'll be talking today alone since my colleague Sasha is not present at the moment. First of all, due to the negative impact, most I will be talking about that. Of course, if you want those who will talk about or to work on positive impact of the news release, could of course just take my suggestions, possible indicator scenario, the suggestions in the possible indicator scenario, and do vice versa. So sorry for a second, they're still having few difficulties on locating my slides. Apparently it doesn't appear at all. Right. So right over here, you're seeing a possible trading scenario on Great Britain pound United States dollar, and in general negative surprise trading strategy due to the fact that, first of all, Great Britain pound overall sold in 62% of all the cases across the board. The market sentiment on the Great Britain pound is, well, moderately bearish. 63% of traders hold short positions on the pair, and 61% of pending orders in the range of 50 pips around the current market price are actually set to go short as well. So in case of some sort of volatility, we're going to see additional pressure on the pair. And all in all, that's some technical aspect. On the daily chart, we have a double top pattern. And if you look at this support resistance, which is written right over here, so that will be actually at the neckline of the pattern. And it had been tested twice already. Last time it didn't manage to dip below it. So since at the moment it is trading below it, I would say it's a strong indication that the pair has the propensity to sort of work out the pattern, and which main presumption behind it is that the pair fails to reach new high or new relative high and gradually returns to the previous trading levels. So that's gives additional support for further depreciation of the pair. Now, possible strategy itself is to buy at market and put the stop loss on the daily high 59003. However, we can see the pair is once again return above the key support resistance and the mentioned neckline, and therefore this we might increase, if the pair stays there, we might increase the stop loss. And in such case, I would put it in, yes, I guess daily pivot point at 59122, and take profit actually would weekly low weekly low at 158.54.7 would be a good medium term target, as it is around 40 pips from current trading levels. Of course, daily low at today's low at 58787 offers short-term returns of 16-17 pips, which are not bad as well. However, I would, in my opinion, the weekly low could be a much better target. And if you actually think that the data will come out better than expected, just vice versa these numbers, and then stop loss actually should be put at the daily low, and take profit actually could be even set as high as daily R1, daily pivot R1 at 59.69.8, mainly due to the fact that recently Great Britain pound had how to put it, a number of negative things going around, right? And especially taking into account the previous release of data on Monday and what reaction we saw then, and once again that the sentiment across the board is strongly bearish. It might be that positive news would sort of accumulate on that and would have substantially larger effect than it usually would. So I guess that would be all at the moment. Now just let me look into the technical indicators, what they are showing, and I guess that will cover some few minutes. What else I could highlight? Oh yes, it is no less important the fact of general market sentiment towards Great Britain pound, which you can see right over here, and you can see that only in euro case. Let me move out a little bit from these drawings. So yeah, or you can see that only in euros case actually traders expect some sort of bullishness from the pair. In all the other case, it is clearly a bearish signal, and I guess everybody understands that in euro Great Britain pound case, everybody is still, well, there are some repercussions and some effects coming out from Thursday's unexpected ECB rate cut. So therefore I would be a little bit reluctant to trade on this pair, on euro Great Britain pound. Well, actually maybe even the whole day today. We're having 3 minutes left till the release of the news. And where are the technical levels? So right over here we're seeing technical levels, and as you can see from mainly even the indications are negative, which are coming mostly from the trend indicators, and nor SI nor stochastic actually, and let's say most of the relevant horizons are not giving any, let's say, bullish signals or indications that we could expect some sort of appreciation of the pair. So we are what, few minutes till a little bit zoom out to make it a clearer view. As I mentioned, you are seeing a 1 minute chart, and key support, key support resistance actually is the neckline of the double top pattern on the daily chart. So once again, take profits could be so set as low in this possible trading strategy as low as weekly low at 58.54.7, and stop loss could be set at the daily high at 59.003. So what is it now? It is what, 2 minutes, 1 minute left till the release of the news. And of course, to be on the fair side, it is worth mentioning that at the same time we will have the release of claim and count change and average earnings index in the Great Britain. So there might be in general an increased volatility in the market. And for those who expect positive effect, actually could set the take profit at the daily pivot point, or in my opinion more relevant, daily R1 right over here, and then stop loss could be set at the daily low. As we are seeing some trading activity which is closing and actually messing up a little bit the offered and possible trading strategy, not offered but possible trading strategy. I guess if the pair remains in this daily high at 59.003, we could set then stop loss at daily pivot at 59.112. Okay, we're seeing some initial reactions 1 minute before, technically release of the data. So we can see that it was 14 pips, some initial, right? And I guess some sort of data already came out. So unemployment rate actually 7.677, As far as I understand, this is close to expectations. Claimant count change is better than expected, which was around what, 33 ton, and this offers actually a significant shows a significant reaction from the market participants. During the release, while we're still having an ongoing reaction, it is around 40 pips. So it is approaching 59.50, and apparently we have reached the peak of initial reaction, which is 45 pips. And I guess the traders who are trading on that could actually leave the position right over now, as apparently this psychological effect of 59.50 being some sort of major level is having some impact and keeping the pair depressed, as prior to the daily R1 at 59.69.8 we do not have any major technical levels to sort of support what we're seeing right over here. And of course, as usual, we will see some sort of bearishness after this some sort of peak major rally, and after that the pair should continue developing as expected. Well, in my opinion, this was a little bit unexpected release data, right? Especially from the numbers we saw on Monday, and overall market reaction and market attitude of the traders. I guess this overall sentiment numbers and the fact that Great Britain pound, United States dollar Great Britain pound in general was sold in 60% of the cases, right? Sort of identifies and shows how underestimated the possible news release, well, undervalued, not undervalued, but undercalculated the possible news release was, which led to some of the traders, of course, to 45 pip gain, which is a substantial, I would say, gain in 1 minute. But as I mentioned, now we're seeing some sort of bearishness, which might last till the daily pivot point, and after that the bear should, move into normal, well, relatively normal pace of trading. So I guess that would be all from my side, right? Just to highlight, it seems that mainly due to the same data as expected coming in unemployment rate and average earnings, it seems that the traders were mostly influenced by claimant count change. Therefore, we saw some volatility initially, as the traders who were betting on unemployment rate itself, I guess, were leaving the positions, and those who stayed actually were able to scalp on the release of the claimant count change. So I guess that will be all from my side, and I hope you found this useful. If you have any remarks, comments, feel free to contact me. I would be very happy to go into some sort of, well, can't call it academic discussion, but in general in discussion, and to see maybe I missed something, or maybe there are some other explanations to what happened, and I would be very interested to hear them, and maybe employ them in future presentations of the releases of the data. So I guess that will be all from my side. I hope you found this interesting and useful. I wish you all a good trading day, and for those who won't, a good trading week. And yeah, that's all from my side. I give the concluding word back to you, Gita.
Great, thank you very much, Thomas. It seems that we can wrap up this particular part and